In June, most investors were focused on the Brexit referendum, and ahead of this critical event, markets moved in line with poll results. Improving economic fundamentals, illustrated by the robust PMI figures on both sides of the Atlantic, were somewhat overlooked and did little to improve risk appetite. As expected during such an uncertain environment, risk assets experienced sizable losses after the result of the Brexit referendum. It's nonetheless important to note 2 points. First, US and EM risk assets were relatively spared, which is supportive for portfolio diversification purposes. Second, European credits outperformed European equities, and within European equities, financials and banks in particular experienced most losses in European markets. Both factors were very important to explain the strong resilience of hedge funds in June. First, over the course of the second quarter, they decreased markedly their exposure to European banks. And second, many strategies, such as event-driven, are mainly exposed to US markets and as a result were relatively spared by the market turmoil. In addition, some hedge fund strategies, such as event-driven, are structurally more exposed to US markets than European ones, which explains why they were resilient in June. Overall, the Lyxor hedge fund index is down 1.3% in June, and there was a significant heterogeneity across the performance of hedge fund strategies. CTAs very significantly outperformed, up 5.2% in June, while global macro strategies underperformed as a result of some exposures to European equities, partially hedged by short positions on the GBP versus USD. In between, long-short equity, event-driven strategies were down between minus 0.5, so for event-driven, to minus 2.2% for long-short credit strategies. The outperformance of CTAs was related to their defensive positioning. They were broadly neutral on equities and neutral on energy contracts. Meanwhile, they were long on fixed income assets across the regions, European, US, and Japanese fixed income. They were long on safe havens such as precious metals, and they were long some safe haven currencies such as the Japanese yen against the USD. Finally, CTAs were also short the British pound and the euro against the USD, and the sharp movements in FX markets contributed significantly to the gains of CTAs in June. As a conclusion, we keep preferring strategies with less market directionality in hedge fund portfolios. That implies a preference for merger arbitrage versus special situations in event-driven. That implies as well a preference for long-short equity strategies with a variable bias or market neutral versus long bias. And that implies a preference for fixed income arbitrage versus long-short credit in the fixed income space. We also maintain the overweight stance on CTAs to the extent that we expect volatility to remain elevated in the near term as a result of the uncertainties associated to the impact of the Brexit vote.